So now that we know that there are two main types of control account, or we are going to bother ourselves about two main types of control account, what's next is for us to go on with how to prepare these control accounts. And as we indicated, the two types of control account, as you see on your screen, are the debtors control account and the creditors control account. So we'll pick the debtors control account first. We'll pick that one first. And who will read for me? Who will read for me? Let me see who amongst my professors read for me. Prof. Ella, if you can read for us, I'll be grateful. Prof. Emanuela.
Okay, so debtors control accounts is also known as sales ledger control accounts or receivable control accounts. It is the summary of all individual debtors accounts in the sales ledger. The following are some of the items appearing in the sales ledger control accounts and the sources to get them.
Thank you very much. Thank you very much. So, professors, the first type we are looking at is the debtors control account. And we are saying this control account is also known as the sales ledger control account, simply because when you open the sales ledger, okay, you find the account of debtors, and we know who debtors are. Now, to be able to prepare this control account, we need to know the items that will be used to prepare this control account. So let's look at the items, and again, it's important to know where you will get those items to prepare the control account. So let's see how many we have here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 items to look at. So at this point, I think I'll be asking my professors about some of the meaning of the item. So the first item is credit sales. Credit sales. Credit sales. And I believe my professors know what credit sales are. These are sales to customers for which payment will be made later. Right? So the customers don't pay now, they'll pay at a later date. That's credit sales. And you'll find this from your sales journal or your sales daybook. Right? You remember when we're preparing the sales daybook or sales journal, we only put in credit sales. So that's where you can find your credit sales. And normally you pick the totals. You pick the totals. The next one is dishonored check. Professors, what is a dishonored check? Dishonored check. Who has an idea? Dishonored check. Dishonored check. Oh, I would be happy for a professor to tell me what a dishonored check is. Who is going to do me the honor? Prof. Adam, any ideas what a dishonored check is?
Dishonored checks are checks that have been refused for payment by the bank due to errors or insufficient balance on the issuer's bank account.
Awesome, awesome. That is great. And that is very true. So a dishonored check simply means a check a bank is refusing to pay, like he indicated, because there are errors on it or the person does not have enough money in his or her account. So that's a dishonored check. You'll find this in the cash book, right? In the cash book. The next one is interest on overdue debt. So you can appreciate this that sometimes if people owe you and they are not paying on time, you can add more interest. Okay? And Even in the trading environment, if you owe me 10 cedis today and you say you pay it next week, I'm going to add a little interest to say 15 cedis. If after next week you still haven't paid, I can add on, because the more you delay, the more interest that accrues on the debt. So interest on overdue debt. Next one is cash refund to debtors. I think this is self-explanatory. So we are giving back some monies to our debtors, probably because they overpaid the account, or maybe the time for payment is not due yet, but we have received the money, so we decide to refund it until the right time for the payment is due. Even though technically it doesn't make sense. For example, someone owes you 1,000 Ghana. The person says he will pay next month. Then within this month, he pays. But because the contractual terms were that he will pay next month, if you don't want any issue, you would give back the person's money and say, okay, why not pay as stated in the contract? The next one is cash or check received from debtors. So your debtors, of course, can pay you some money to reduce their balance. Right? Then discount allowed. I want to believe we are all familiar with this item, discount allowed. When we reduce how much debtors owe us because we want them to pay promptly. Right? So discount allowed is a cash discount given to allow for our debtors to pay their outstanding balances. Okay. Then returning was, we are all familiar with returning was, goods returned to the business by customers or debtors. Then bad debt. Bad debt. When we say bad debt, it means debts that are deemed irrecoverable, okay, or debts that looks uncollectible. Okay. If somebody owes you and you can determine that, oh, this person will not pay, then that is a bad debt. For example, if the person unfortunately dies, then it becomes difficult to take your money, right? So the debt becomes bad for the person, or the debtor is dead. It's also possible the debtor can go mad or insane. And I've never seen people chasing mad people for their money, right? Then you have bills receivable. Now, bills receivable is a negotiable instrument, okay, which can be used by a debtor or can be issued by a debtor to the business to effect payment of a debt. So it is similar to the cash or check received from debtors, but it's a negotiable instrument. It's a document that a debtor can draft to a business he or she owes, promising to make the payment maybe at a future time, or directing the business to go to a specific bank for the payment to be effective. Then we have contra entry, or what we call settle. So let me give an example to explain this. I owe Adam 50 cedis. Adam owes me 50 cedis. So we agree and say, okay, you owe me, I owe you. Let's set it off. So the set off here means that a debtor might also be a creditor and may have balances with the business. Another realistic example is I supply cassava to a chop bar, and as a supplier, when I go there too, I eat some of the food. Okay, so we can agree that, okay, I supply you, so I'm your creditor. I also eat your food, I'm your debtor. If we have any balances, let's set it off. Let it cancel each other. And I'm sure we have been doing this. Your friend owes you 20 cedis. You go out for break. You take 20 cedis from the person. It's okay. Use it to cancel what I owed you. We have been doing. Then the last one is transfer of balances. Yes, we'll get there where a debtor's balance can be transferred to a creditor's balance. It's more or less similar to the setup, okay, but we'll get to know how it really works. So these, professors, are most of the items that you'll be seeing when it comes to preparing the sales ledger control account. Is any question up to this point? Any question? No question. So now what is left is for us to know the format of the sales ledger control account. And before we look at the format, professors, I want to make this valid point, and please listen carefully. See all these items that we have listed here. You would all agree with me that each of them either increases the debtors balance or decreases the debtors balance. Okay, I'm making the point. Each of the items we have listed here, be it credit sales, dishonor check, whatever, it either increases debtors balance or reduces the debtors balance. Now, if you can effectively know whether the item increases or decreases the debtors balance, then preparing the account will be very easy. How is that possible? Let me demonstrate that below for you. So as we know from our fundamental accounting principle, if this is a debtors account, right, we know that the normal balance on a debtors account is a debit balance, or let me say debtors have a debit balance. Even though in some cases they can assume a credit balance, the normal balance on a debtors account is debit, right? So we all know that. So professors, if any of these items here would increase the debtors balance, and permit me to use the sign plus for increase. If the item will increase the debtors balance, then we will debit it here. If the item is going to decrease or reduce the debtors balance, we do what? We credit it. That is the technique you can use to prepare the debtors account. Another technique you can use it in analyzing the items, you can determine whether the debtor, and as you know, the debtor is a person, right? The debtor is a person. It can be Kofi, or it can be Ama, or it can be an artificial person like a business, maybe MTN or XY Limited. So if you are looking at it from that perspective, then we say that if the item connotes receipts by the person, as you know from the double entry principle, debit the receiver, credit the giver. So if you analyze the item and you realize that in that item, the debtor was receiving, then you can debit it. If the debtor was given, then you do what? You credit it. But I always suggest to students to stick to all the items that increase the debtor's balance, you debit, and all the items that decreases it, you do what? Credit. So having said this, I want my professors to pick one of the items here and explain to me whether it increases a debtor's balance or decreases it. And for that matter, we should debit or credit it. So any of my professors can pick any of the items here, okay, be it credit sales or discount allowed or returning, and do the analysis for us whether it will increase the balance or reduce the balance, so we know whether to debit that item or credit it. So who will do that for us? Who will do that for us? Professors. Actually, I don't know if now you have picked a little. Okay, Prof. Eden, let me hear you.
Okay, so I would start with credit sales.
Okay.
So I think it will be debited. It increases the debtor's value.
Okay. Thank you very much, Adam. That's awesome. Thank you very much. Is anybody here disagreeing with Adam's point? So according to Adam, credit sales increases debtor's balance, and for that matter, it should be debited. And of course, there's no doubt about that. It is true. What is credit sales? Credit sale means you are selling to the customer and the person is not paying. So the more you sell to the person on credit, the more the person will owe you. And so it's only obvious to say that credit sales increases debtor's balance. You can always use somebody as an example. So take your friend as your debtor. Then you keep selling to this friend on credit. What it simply means is that this friend will be owing you more and more. So credit sales would increase the debtor's balance, and for that matter, is credit. What item is next, and which professor is going to tell us? Yes. Tell them, would you give an attempt? Would you try?
Okay. Sir, please, dishonor check.
Okay.
It will, yeah, it will increase the debtor's balance since it's a reversal of the original payment.
Exactly. Okay. Okay. That is true. Thank you, Prof. I appreciate that. So the dishonor check, as we said, is a check that the bank is refusing to pay. So what happens is that your debtor gave you a check. So let's say your debtor owes you 200 cedis. He gives you a check of 150 cedis. What it means is that the debt will reduce, right? To so let me write that. The person owes 200 and has paid 150. So when we do the subtraction, it means that the debt would reduce to 50. But then you go to the bank and the bank says, we cannot pay this 150 check because of some issue. The date is wrong, the amount in words is different from the amount in figures, or the account does not have enough balance. Okay. So if the bank says they cannot pay, then it's also true for the business to say that, hey, your debt cannot be 50. It has to go back to where 200. So you see that the dishonor check would lead the debt coming back to its original state. And how is that possible? It would have to be increased by the 150 dishonor check. Okay, so the dishonor check is a reversal or is restating the debt. And the restatement is done by increasing the debt. So for that matter, dishonor check will be at the debit side. Thank you very much, Prof. Okay, I think I can do the others unless Prof. Charles would also want to pick one of the items, or Prof. Ella would also pick one of the items and speak to us about whether it will increase debt as balance or reduce. Okay, so let's go through together. We are done with credit sales and dishonor check. Now, interest on overdue debt. So the person hasn't paid and you are charging interest. It's obvious. The interest will make the debt increase. And so that will also be at the debit side. Cash refund to debt. You are refunding cash to a debt. What would that do? Would it not increase the balance? Or if you are to use the debit the receiver, credit the giver, if the business is refunding to debtors, the debtor will be receiving. So it would be debited. But on the point of whether it increases or reduces the balance, let's assume your friend owes you 300 cedis and for that matter is your debtor. Okay. Then, due to some reasons, okay, you refund 100 cedis to your customer. That would simply mean that his balance will go up, because like you are giving him some free cash in there, because the person is owing you and he is supposed to pay, but you are refunded. So let's assume that this person paid 100 cedis of the debt. Okay. But then you said that, oh, no, I don't want you to pay the debt in bits. So take back the 100 so that you pay me in full. There are some people like that. When you owe them and you pay them in bits, they don't like it. So when you give them the money, they will refund it back to you. That no, settle everything in full. So if that is the case, and this 100 cedis is refunded back to the debtor, then you would agree that it will increase the debt back to its original point. Okay. Then you have the cash or check receipt. Of course, if you receive a check from the debtor, it is going to reduce. But the person is owing you, the person is giving you check or cash, it will reduce the balance. So that one will come to where the credit side. So those that are marked with this will go to the credit side. Discount allowed, as we all know, discount allowed means you are reducing the debt for the person so that the person can pay. Right. Then that will be on the credit side. Return invoice. It means that the person has returned some of the goods to you, which would also reduce the balance, because if you sell goods to somebody at 1,000 Ghana cedis, and the person for that matter owes you 1,000 Ghana cedis, if he or she returns 200 cedis worth of goods back to you, then he will no more owe you 1,000. He will owe you 800. So the return invoice is going to decrease how much he owed you. Then bad debt written off. Okay, the person cannot pay the debt, so you want to cancel it. Of course, cancellation means a reduction, right? Then the bills receivable, as I indicated to you, is a negotiable instrument that is accepted as a medium of exchange or a form of payment. So that will also reduce the debtors balance. Then the contra entry. Let me explain the contra entry. Debtors have a debit balance. Okay, so if you want to use their balance to set off or cancel anything, definitely that set off should be at where? The credit side. So set offs are always at the credit side of the debtors control account, simply because debtors have a debit balance. So any set off will be credited. Set off means you want to cancel that balance, right? So if you are canceling, you can't put it at the debit side. You put it at the credit side to cancel. And then the transfers, I think when we discuss the creditors control account, we'll look at the transfers. So then I can now show my professors the full format of the sales ledger control account. Please, if you have any question, let me. If there's something you didn't understand or hear well, you can ask me and I'll repeat the points for you. So as we have already discussed, this is the format of the sales ledger, and you see that all the items that would increase the debtors balance being debited here, right? Credit sales, the standard check, interest, refund in there. And at the credit side, you have the cash or check received, discount allowed, returning was budget in the contract entry. I would explain the transfers or the balances that are being transferred here. So normally, how are the questions set? The question will give you this list of items and they will ask you to prepare the two control accounts. As simple as that. Okay, so professors, let's finish up in the last or third session by looking at the creditors control account. So let's all meet in the final or the third session. But before you go, if you have any question for me, please, I'll be glad to have your questions and answer them for you. But I must say, I'm highly impressed with your contribution today, and I hope that you keep it up for the rest of our time on Omega. So let's meet in the final session.